Got 3 minutes for some financial literacy? I knew you would. Come on. Part 1. Understanding your balance sheet. A beginner's guide. Presented by Black Girl Magic Masters LLC. Because you already know we're trying to say this whole motherfucking universe one person at a time if we have to, because we're on a straight up mission to restore our people and community financially. Okay, because like I gave these teaching videos, and in the last teaching video, we were talking about the 2 most important financial statements. And the first one was the income statement, which was in the past video. Go look it out. Go check it out. You'll see what I'm talking about. But this is the second most important financial document in a business, and that's the balance sheet. So let's get into it, because what is a balance sheet? A balance sheet, my friend, is a financial statement that reports a company's assets, liabilities, and equities. We're going to get into the definition of these words in a minute, but basically your financial... So a balance sheet provides a snapshot of your company's financials, the position that you're in at a specific point in time. So the formula for the balance sheet is assets equal liabilities plus equity. So assets is what you own, right? Okay. All right. Now listen. Assets are what you own. Liabilities are what you owe. You subtract liabilities from your assets to get your net worth. You keep your balance sheet up to date. And of course, like, you're getting to know that liabilities, what you owe, there's 2 types of them. You got your current and you got long-term liabilities. Now, current liabilities or current debts are the debts that you owe within that year, while long-term debts are debts that's due after that year, right? So an example of a current liability includes, or a current bill that you got to pay creditors, is your accounts payables. You know what I'm saying? The shit that you got on credit, the salaries that you got to pay to your employee payables, and your taxes payables. Shit you got on credit that you got to pay back. Now, long-term liabilities include loans and mortgage payments. These are your debts. Liabilities, debts, one and the same. Now, understanding your liabilities is going to be crucial to managing your finances effectively. So, equity. Now, that's what you got left over, right? Equity is the residual interest in the assets of a company. It represents the amount that would be returned to the shareholders if all the assets were liquidated and all your debts were paid off. Equity is calculated as assets minus liabilities. All right, follow me to the next video, part 2. Yeah.